Namaskaram friends, welcome to StockEdge. Myself Tufan from the StockEdge research team. Yes, we are living in an era of war. So what is that war? It is tariff. So what do I mean by tariff? It is basically the outcome of a populist mindset. And today at 1:30 a.m. IST, Trump is going to announce new tariffs and reciprocal tariffs across different nations. So the market is currently in a very volatile state. Lot of uncertainty is hovering around. Fine. So please do watch it till the end because I'm going to post a question for you all. I hope you will comment it in the comment section below. So let me just explain you Bollinger Band. Why? Because my question is related to Bollinger Band. So basically, it's a volatility indicator which measures the market volatility or any index or any stock. Wherever you put Bollinger Band as an indicator, it basically measures the volatility. I'm not going into the formula right now, but three major patterns that I would like to explain to you all are: number one is pinch pattern, number two is squeeze pattern, number three is spart pattern. So in Bollinger Band, you can see whenever Bollinger Band comes like this pattern is known as pinch pattern. Whenever after a pinch, you will always find a squeeze pattern. That means price gets contracted, or you can say there is lack of volatility. Fine. And after a squeeze pattern, there is always a spart. That means the volatility increases. And this repeats in cycles. So pinch, squeeze, spart. Then again pinch, squeeze, spart. Now I'll come to my next slide. So it's all about fear index, right? What is fear index? It is basically volatility index, VIX, and India VIX is copied from CBOE VIX. So CBOE VIX is basically Chicago Board of Options Exchange Volatility Index. From that VIX, National Stock Exchange took the license and constructed Indian VIX. Perfect. So there is a thumb rule in VIX, that is, when VIX rises, market falls, and vice versa. That means when VIX falls, market rises. So now I'm going to the final slide for the question that I'm going to ask. So I have opened TradingView, and you can see there are two panels. One panel constitutes the US VIX and the lower panel is India VIX. Fine. And as I have explained that India VIX is basically constructed from CBOE VIX. So there is a natural tendency that there will be high correlation. Right now, US VIX is hovering around 23 and India VIX is hovering around 13.72. Please do watch it minutely. That is, if I just zoom out a bit, you will find that for the last few weeks, you can say, India VIX is moving in a range of 11, 12, 13, max 14, or currently you can say it's around 13.72. So ideally it is towards the lower side of the whole range. On the other hand, just look at US VIX. US VIX is moving on the higher side, correct? Now look at the Bollinger Band. Here in US VIX, Bollinger Band is basically in a spart. Let me just create the, you can see the pattern in Bollinger Band over US VIX is spart, right? On the other hand, in India VIX, you can see it's squeeze pattern, squeeze pattern. It's squeeze pattern, correct? Now, let me just zoom out further. Now I'm going to weekly chart of India VIX and US VIX. Now on this weekly chart, you see that US VIX has given a breakout from this Bollinger Band, and it is in a spot, or you can say the initial moment of the spot pattern. On the other hand, if you look at India VIX, it is again on weekly chart, it is in a squeeze mode, right? Now another interesting part that you can look from here, the mid Bollinger Band, that is the 20 SMA of this volatility index. You see that this is how it is moving in US VIX, and in India this is how it looks, correct? Let me just go back to Delhi once. In Delhi also, you see that India VIX is hovering towards its lower range with a squeeze pattern in Bollinger Band. On the other hand, US is moving higher, correct? Now, in this era of war, where volatility is surging across the globe, lot of uncertainty is there. Now, let me just get back to that slide which I had explained. What I had explained you in Bollinger Band, there are three patterns. One is pinch, the other one is squeeze, the other one is spot pattern. So pinch is basically after a volatility expansion, the contraction is going to come, right? And in squeeze, there is no expansion. It is completely in a squeeze mode. That is, the volatility is in a contracted mode. And spot again comes after the squeeze, that is, after the contraction, expansion comes. So it always moves in cycles. Now correlate this pattern with India VIX and US VIX. So please post your comment in the comment section that what's your thought regarding this, because fear index is inversely proportional to overall market, that is specifically equity market, correct? Have a great trading session tomorrow. Thanks for watching. Goodbye.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.